Welcome to Charts Today. My name is David Linton, and today's edition for Tuesday, the 17th of March, St. Patrick's Day, comes to you from London. And in fact, in our report this morning out to clients, our energy report, we put a little clover in there because it's always nice. Luck of the Irish. So this chart is the German bond yield. And I talk about bond markets. Yields rising, bonds falling. This is really significant. Train tracks with the targets, multiple buying thrusts, multiple thrusts pushing the yield higher, and that's really significant. And we are seeing globally yields rising. That's the German yield. If we look at the UK yield, this is again the daily chart, medium term. We recently activated a new upside target, and the interesting thing is we're on the verge of really breaking these levels. And if you look at some of the yield charts, they're really quite scary, these long-term targets. So and here's the longer term German chart. So move up, sideways, move higher. So that's really quite key. And we're seeing, and if any of you've watched my resources, remember on the updated website, there's lots of free resources. There's all of the LSEG masterclasses. I do those on the third Friday of every month. They only allow professionals, but I record it, and so you can watch it immediately after. So it's available there, and there's a whole series of videos. And this is effectively our 12-hour training course broken down across years. We are doing a special offer on our training course if you want to do the 12-hour training course. But there's lots of resources here. You can do the TA exam, see what your score is. Charts Today, of course, and there's lots of other videos. And for professionals, our reports, the morning call report for energy, and we've just started doing a weekly softs report, which covers soft commodities. But the great news is you don't really need me to do these reports because you can actually look at the markets yourself. We'd look at that German bond yield. A lot of people using the targets on Bloomberg. Professionals here, we see multiple upside targets on Brent crude on the 60-minute chart, and that's that German bond yield chart. So, and of course, Bloomberg famous for its bond analysis. So the targets are there, and you can apply these to any chart by just hitting the T key and update it. The other standout was the Reserve Bank of Australia raised their interest rates overnight. So that's really significant. That's the second raise, up to 4.1%. The dollar in Australia has already sort of priced in these rate rises. So, we're waiting to see if we activate this upside target there for the dollar. But you can see that we are on the verge of activating a new upside target to a much higher level. So that's certainly something that you've got to watch, and really quite key that we're seeing the markets reacting. Now, the dollar continues to be strong. The US dollar is really a rush to liquidity probably is the key thing. And my Friday session, which I'm doing with LSEG, is on correlation, and we'd be interesting to look at correlated assets, and that recording will be up for you to watch. Indian rupee continues to rise. That's one I've been watching, a particularly difficult situation for India with their oil requirements in the Middle East. So, we are seeing their bond yield potentially going to 7.5%. So that's really significant there. Now, markets actually held up pretty well yesterday. The Nasdaq recovered 1%, but that is not enough to change the fact that the day before, on Friday, that downside target was activated. So even if we rise now, that target only hangs over us unless we break to a new high above the thrust. Remember, that selling thrust, and then the move below is what has activated the target. So the key thing is that target hangs over us now until the Nasdaq makes a new high. So you can't change the fact that it's there. Whether we hit it or not is another matter, but the reality is that we are failing to make a new high. October was the high, and we are below the cloud for the first time in a year. So really significant there. We're seeing the futures down this morning. The US S&P future down 0.4%. And if we look at the DAX in Germany, that's down slightly. The FTSE is slightly up, but you have to remember with the FTSE that you've got the oil majors, BP and Shell, accounting for a significant amount of the index. And so if I just rank those, you can see a lot of these companies, BP and Shell, in the top performers up 1%. That will be enough to push the FTSE higher. And you can see those upside targets given and met. And if we look at the 60-minute chart, more upside targets. So that's really quite key there, that we are seeing these moves higher and higher. No big surprise, because we've got big moves in the oil price, up another 4% this morning. This is UK gas prices. So as much as we hear all the news about the price cap, the reality is the whole energy mix has been drawn up by what's going on in the Middle East. So this is actually the 1 minute chart. If you're looking at real-time data or delayed data on the 1 minute chart, that will often give you a heads up as to what's going on in the market. So a lot of our professional traders are looking at those 1 minute charts, are trading these products. So that's what's driving the FTSE higher, and that is a standout as well. Now looking at Bitcoin, that had a bit of a flurry yesterday. And the reality is that whilst the 60-minute chart is looking quite bullish, the daily chart is looking pretty bearish. We are seeing a little bit of recovery there, but you need to get back above 80,000 on that chart to be bullish. Remember, this is not me making any recommendation. It is just what the charts are saying. The targets are derived from point and figure targets invented in the 1940s. So there's nothing new there. We saw most other markets. The Sensex was up. Australia was up despite that rate rise, but the Sensex is up on a chart that has really been plummeting, so really quite key. Looking at just some of the soft commodities, wheat and corn in our report were bullish yesterday because we do have upside targets there. So the great thing is, you see, I can just go to any chart. I'm above the cloud and I've got an upside target, and that's quite key. And on my screens, and again, this is in our latest version of the professional product that many of you are using. On our screens, I've got basically my calls. So I've got long-term, medium-term, and short-term. I can see the trends based on the Ichimoku charts, plus all the support levels and the target levels in my screen. So that's really what I'm looking at when I first go to the charts in the morning. Now, we saw that wheat is bullish. Corn was also bullish. What about gold? I didn't cover gold yesterday. Gold is interesting in that we've activated this downside target. We are still above the cloud, so you can't really call this bearish, but we do have a lower high, not yet a lower low. We'd have to move back below 4,500 for that, but we are struggling at this 5,000 level. Go to the 60-minute chart. That'll give you a little bit of a clearer picture. You see here, lower high, lower low. Again, if you've looked at my free resources, there's a session that I did for LSEG on that, how to spot a trend change. And then a break lower, and now we've just got this level at 4,973. Watching that on the chart, we may not make these downside. That downside target was met, which is bearish confirmation on the short-term basis. We may not make this downside target, which would be bullish confirmation, but we are below the cloud. So that's on this 60-minute chart. On the daily, we're still above the cloud, and of course the long-term chart is very bullish. So you do need to think about these time horizons. Silver, that of course had a lot of people watching the market in January. We're seeing here move down sideways. It's just really range bound at the moment, so not an easy call. We talked about bond yields. Looking at the last of all, tech stocks are up, and that's it for today. I always try to do it in 10 minutes. Bye for now.